Hello, and I'm glad to be back in Onslow County to discuss your benefit plan for the next open enrollment. Our open enrollment for this spring starts March 19th, and we'll go through the first week of May, I believe ending May 4th. And we will be meeting with every individual person during that time. Before that time, we are encouraging your site supervisor or principal to gather everyone in the group meeting. We are using this video format this year for everyone to watch, which will hopefully make it a little more flexible and a little more convenient for everyone to see that. At that time, we encourage everyone to sign up for an appointment. It is required, if you're a full-time employee for Onslow County Schools, that you do meet with us during that time. Your supervisors will also be receiving an email from the central office explaining the schedule and when we will be in each individual site to meet with you during those individual appointment times. They will also receive a blank sign-up sheet to use during that time, so I encourage you to make sure that when you have seen this, that you do get signed up for an individual appointment to meet with one of our representatives when we come to your school. The week before, the week of March 12th, we will be sending out our plan books that we typically always send. On the back of the book, we'll have the First Financial name and 800 number for your reference. I always encourage that you keep that number handy during the year, especially for after the open enrollment is over, to answer any questions you might have. On the front of the book, it will remind you that your plan year starts September 1 and goes through the following year. So the decisions you make during this open enrollment will become effective with your next school year starting September 1. With that said, let me discuss the products. There are some major changes, as in every year. There are some things that everyone needs to know so that you don't miss the opportunity to either sign up for something new, but even worse, you don't want to miss the opportunity by not meeting with us and have a benefit lost because you failed to come and renew something. Let me just start with the flexible spending accounts. The medical reimbursement account has a $2,600 limit as usual. No change in that. It comes with a debit card to be accessed for use at any point of sale for those medically qualified expenses. As in the past, we have allowed spouses and children 18 and over to carry those cards. One of the new IRS rule changes this year is that we must have Social Security numbers attached to anyone that is carrying that card. So even if you haven't had that in the past, they will stop working if we don't gather that Social Security number during this open enrollment period. So make sure, I think it's always a good idea to have Social Security numbers for anyone that you're carrying on your benefits as well. So if you could just make a note, that plus other products require Social Security numbers as well. If you will just gather those Social Security numbers for your spouse and or children, we can certainly populate our system with that when your time comes for your appointment. And then we will have that out of the way for anything else we may need in the future. The dependent care account is still $5,000. No change to that amount either. We suggest you talk to your tax advisor to see if that is advisable for you to use for your dependent care as well. So both of those accounts still fall under the IRS rule of use it or lose it, meaning that if you don't use those dollars during the plan year, you don't get back the excess dollars you didn't use. So make sure you know it's money you're going to spend during that plan year, not just think you might. So that is it for the flexible spending accounts. Your vision plan is the same as it has been in years past, the community eye care. Strictly, it's called the 165 plan. Basically, it pays you for your exam with a $15 copayment, up to $165 for materials, whether that be glasses or contact lenses. It also has a $25 copay for a contact lens fitting exam. So it's a comprehensive vision plan. The dental plan has gone up a few times in the last few years, and at the time of this filming, we are still negotiating with our existing company, plus looking for a bid from another company to hopefully bring down that cost for your dental plan. Being one of the more widely held products that people do take here, it's important for you to realize that your plan book, when you receive it, will have the details about your new plan, but one thing I can promise you is that it's going to be as good or better plan for less cost. So that will be very much a positive, and we will have that in the system when you come in to meet with us, and you can decide about who you want covered there. Most all of our benefits, like I say, can be covered from you individually all the way up to every member of your family. So look for that in your book and decide. Maybe cost has been a prohibitive factor in the past, and you may want to consider signing up for dental if it's a little bit better value for you now. Now, after those two, when I get into more of the insurance policy type products, we do have the American Fidelity accident plan, and that accident plan is pretty self-explanatory. If there's an accident, there's a benefit. The easiest way I can describe it, if it's the worse the accident, probably the more the benefit, all the way up through an accidental death policy benefit with that policy as well. So you can choose from a basic plan or enhanced plan. It is pre-tax while you're on payroll deduction as part of your cafeteria plan benefits, and it does go with you, and you can keep it for as long as you want to pay for that, even when you leave the school system. We have two AFLAC plans. The AFLAC critical illness plan is something that we've had here for about 3 years. When we first brought it in, it was a guaranteed issue, meaning no medical questions for you as the employee for up to a $30,000 amount, and they are raising that guarantee issue this year to a $40,000 limit. So even if you haven't purchased up to that in the past, we do allow what's called a buy-up option for you to raise the amounts of that plan, and that is a very good policy to help you offset what could be some major expenses in the event of a critical illness. So you will notice when you look at the price charts in your book that it is age banded every 10 years, and it goes anywhere from a $5,000 amount to a $50,000 amount, and you can pick and choose that level of coverage according to what you want to pay for, and then in the event of any critical illness, it will pay you that lump sum, and it does pay 100% of the same benefit on a reoccurrence of any covered critical illness, as well as your children are covered under your policy for half of your benefit amount to 26 years old as well. It is a portable product you can take with you. It is available for your spouse to sign up for their individual plan, which can be up to half of the plan amount you take. So you will see all of that laid out in the book. It will give you a lot better description on a lot more of the details, but it's an excellent plan that, again, you can take with you and keep as long as you want it. The other AFLAC plan is a hospital indemnity plan. That's the plan that pays you should you go in the hospital. That's usually what triggers that event. So a hospital admission is a $1,000 benefit. It is, there are no questions for it. Basically, the number of days you're in the hospital, it pays an extra $150 a day you're in the hospital for up to like 31 days. If it's intensive care for another 10 days, it doubles that amount. So it's a great plan that starts with if you have to go in the hospital. Obviously, that plan designed to help you offset what could be some major upfront costs for just a hospital admittance. If there's surgery, there's a $500 for surgery. Then there's anesthesia benefit and so forth. But again, you can read more in the brochure. For both of those AFLAC products, the critical illness and the hospital plan, they are a guarantee issue. So there are no medical questions to get that. So in other words, that precludes any kind of pre-existing condition. Even if you've had those conditions, you can get up to those certain limits on the critical illness plan guarantee, and you can get the hospital plan with no questions. So you can think about that even if you've had activities planned or not activities, but surgeries planned or some kind of operation planned, it will pay for that hospital admittance. Now, after the AFLAC plans, two of the more popular products we've had in Onslow are the Humana products, Humana Disability and the Humana Cancer Plan. Now, that is something that I want everybody's attention to make sure you hear, because there's a major change going on after this enrollment, and beginning September 1, there is no longer going to be Humana in the school system. They made a decision back a few months ago to basically take their products out of the worksite division, so it's nothing that we have done, but it is a change to your plan that's important to know. We have two things there. Like I said, the disability and the cancer. Let me address the cancer plan first. If you have that cancer plan, that is an individual plan that you own. You had to answer questions to get that, so we have no right to say that you have to replace that. But we cannot leave it on payroll deduction any longer. So if you want to keep your Humana cancer plan, and it is an excellent plan and will continue to be one, because you, again, another product you can take with you and keep as long as you want, you have a right to keep that, but you are going to have to call our office and work with them on calling Humana and getting that set over on your bank draft or direct bill so that you can continue paying for that plan. Your representative at your meeting can tell you a little bit more about that should that apply to you. The disability is a little bit different. We have taken American Fidelity's disability plan to replace the Humana disability, and it is also one of the more widely held products because disability, ensuring your income, is probably one of the most important things that I think you would have to consider. If you can't go a year without your paycheck, then you need to give serious consideration to make sure you're insuring that paycheck, and that's exactly what disability does. If you are out of work because of any kind of accident or illness, the new American Fidelity plan will qualify you for a certain amount, just like the other plan did. You still have the same 3 elimination period choices. You can have the benefits start immediately, first day of an accident, 8th day of an illness, or from the 15th day, or from the 31st day. So you get those same choices. The new plan does have a couple extra little bells and whistles to it, if you will. They have a $25,000 accidental death benefit included with that. Plus they have what's called a physician's expense benefit that simply says, irregardless of a disability, if you have to go to a doctor for an accident or an injury, they will give you a $1 benefit, and they will pay that benefit up to 6 times a year. If it's due to an accident, they will pay you $250 for that physician visit. If it's because of an illness, they'll pay you $50. So that could add up to a few dollars for you should you just have to go to the doctor, which most people do sometime during the year for one reason or another. So that's a nice addition to the disability plan that we will be using to replace the Humana. So if you've had that, we will notice that. It will automatically already be dropped in our system. So that's one of the reasons I pointed out earlier. If you don't meet with us and choose your new options on the new plan, you could look up September 1 and not have your income covered anymore with disability. So it's very, very important that you do speak with us about that so we can re-enroll you in the new coverage. The last thing that we offer is our permanent life insurance, and that's through Texas Life. Texas Life has been a provider of your life policies here for 15 years. Many of you have many policies. Beginning last year, they did add a chronic illness rider to those policies for you as the employee. In other words, whatever policy amount you took, if it was new last year, you have that option. If you take more this year or start coverage with a new policy this year, it would be included on your employee policy. And that simply states that if you are later on in life develop a chronic illness that requires you to fail to meet 2 of the activities of daily living, which is similar to the qualifiers for long-term care, that you can submit that policy and they will pay you out 92% of your proceeds. You get that lump sum, put the money in the bank, and you can pay for that assistance, whether that's in-home health or assisted living or even nursing home. So you can, the policy now kind of becomes twofold for you, either leaving it as a death benefit or using it for your own purpose to help cover chronic illness. But it is an age-banded product. Again, smoker and non-smoker tables. So you will see in the book all of those pricings. You find your age, the eligibility amounts, up to 50 years old, up to $300,000. If you've already turned 50, then the limit is up to $100,000. But it is a very favorable way of locking in a permanent, guaranteed premium universal life policy that will go with you and cover you as long as you live up to 121 years old. So think about what life insurance means. Obviously, it's not as much for you as who you're leaving behind, but there's a lot of financial responsibility to be met with life insurance. that policy is effective for your spouses as well. They simply don't get the chronic illness rider, but both of you would still get what's called the accidental death benefit that doubles in the event of accident deaths through 65 years old as well. So there's a lot of nice little features to those policies. You can also insure your children up to 26 years old now for either 25 or 50,000. You can insure grandchildren up to 18 years old for either 25 or 50,000. You'll find that those rates are very, very low on people that young, but that is something that's permanent for them as well. Now, back to the Social Security numbers. That is another thing that we used to say, we'll take your application and you can send in the Social Security numbers. We can no longer do that. They will not let us even take the application now without Social Security numbers. So make a note again, Social Security numbers for anyone you're covering, especially for life insurance or back to the flexible spending card as well. All right, so that's a wrap up of your benefits. I try to be brief. Again, your book's going to have a lot more detailed information in it for you that you can read. I encourage you to maybe re-look at this video if you have any other interest in reading and hearing more about it, or reading your book before we come. So with the enrollment starting on March 19th, I would encourage supervisors and principals to basically plan this meeting out roughly a week or so before we are scheduled to come to your site, knowing that if you met in March and we're not coming till May, that could be a long time in between. But you'll see the schedule and you can plan accordingly to get the sign-up sheets filled out. But I do repeat, it is important that we meet with every single person. And any further questions about that, you can certainly refer to your central office. Linda Waters is in charge of the enrollment from there, as well as Dr. Collins, Barry Collins, whose name will be on the emails as well. So they are fully supportive of the program. We are so glad to be here, and thank you so much for your time. We'll be seeing you soon.